Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is April the 7th. It's 10:30 a.m. in the morning here in Dubai, and we have Brent crude oil once again seeing a big sell-off this morning, down 3% after the sort of momentous events of last week. We're down certainly about $10 in the course of the last week of trading. In our absence, as we were off last week for the Eid al-Fitr holidays, the end of Ramadan holidays here in the Middle East, we're waking up this morning to what happened while we were out of the office. Oh my goodness. Uh, what, see, we should never have left the desk. That's the moral of the story. Omar Najia was probably glued to his desk for the week that we were all at the beach. Omar Najia, Global Head of Derivatives at BB Energy, always here on a Monday morning to explain everything. Omar, what happened in our absence?
Trump is basically what happened. So, so I think basically, I mean, to understand the move that we've had, not just on crude, but on pretty much everything, is that basically people were expecting Trump on quote unquote Liberation Day to come up with tariffs, right? But tariffs were supposed to be to counter the quote unquote tariffs imposed by other people, like other countries like China, the EU, etc., etc. But what he in fact did was something completely different. So I think China has like applies about 7.5% tariffs. The EU about 5 point something percent tariffs, and he did something totally unexpected, which is basically he took the total amount of trade that basically China does with the US and divided that by the value of the goods and came up with a tariff of like 60 something percent. And then he said, because we're nice, we're going to divide it by two. And he came up with 34%. Not only that, but he also had these boards and, showing people these boards. So I mean, the market likes sense, likes to understand, where you get your numbers and all this kind of stuff. So when they were looking and thinking like China has quote unquote tariffs of 7.2%, when Trump says they're actually 69%, we're going to impose 34%, everybody freaked out. So basically, so selling start, and I don't think it's ended. So I think, this is going to be a long-term thing. I don't think he's going to come to his senses or any of this stuff. This is the new, something has to be done to quote unquote save the US economy and all this kind of stuff. This is going to be the first time in history where basically somebody imposes taxes and manages to bring back, manufacturing to the US without, much investment or retraining of people for jobs and all this kind of stuff. So I'm not a big believer, but certainly with the way that the fiscal policy is going in the States, the spending, the deficit, the weakness in the dollar. And don't forget, we've also seen like massive dollar weakness. So not only are foreigners or companies selling the US equities, they're also selling US assets in US dollar. So it's very interesting what's going on. But do I think that we're here and now we kind of stabilize and blah blah blah? No. Usually, what happens is when people think that it's not going to go below that number, it usually ends up going way below that number. So direction wise, I think crude's head lower. Um, I've always had a target of $45 going forwards for WTI. And if we break that, maybe we get into the 30s. So negative, I think, if people, I mean, what's fallen the most? The Magnificent Seven. We've heard for ages how everybody who's putting money aside for saving more than anything else has put them in the Magnificent Seven because they're too big to fail. And what are the worst performing stocks on the US markets? The Magnificent Seven, because simply put, technology isn't going to do well going forwards if Trump wants to, destroy the global thing and chips and labor
Well,
from
he
China.
wants Americans back picking grapes and
Yeah, too expensive,
artichokes
too expensive.
in the Californian desert. And they'll be queuing up for that job. I've no doubt about it. At $7 an hour, there will be Americans out the block and around the corner to pick artichokes. Laura Hitayan, great to see you back at the table. And I wanted to get your thoughts, of course, Laurie, on the decision by OPEC Plus, because in the middle of last week and the eve of the big announcement by Trump to tariff the world, OPEC Plus preempted it with their own little shock and awe of announcing that in May they're not just going to continue with the phased in program of increased production supply. They're going to triple down, quadruple down, or whatever the number was, but essentially go much quicker, much faster than previously indicated, which has added an extra kind of gravity momentum to the downward move in the oil price. Your thoughts on that OPEC Plus decision? It doesn't seem to be in alignment with recent years of we must balance the market. This one looks off outside of that sensible box. Your thoughts?
Yeah, definitely. I guess the worst thing that people wanted to see, like that's kind of a scenario with the trade war and seeing like this extra barrels coming into the market so that the prices go down. So basically, I think like now from what we are reading, from what we're hearing, so now the pressure is on all the countries that were not compliant, saying that, yes, we are putting this into the market, but at the same time, you people that have been kind of cheating, and we were like every time giving you warnings about compliance, you need to be compliant. Now it's time for you to be compliant if you don't want to see more of this prices going down. And basically as well, like we know, like going down, prices going down definitely does have an impact on the economies of the region, of our region, because they want always to see higher prices with a good market, because then they will sell more, they will have revenues more, and they will implement all the diversification projects, economic diversification projects that they all now have on their radar. But at the same time, if this low price will hurt a bit the American oil and gas production, why not? Because it's a trade war at the end of the day. So every country, I guess, is trying to see like how to counter the trade war and what are the strong points, strong cards that they have in their hands to play it, and then to kind of bring maybe some sort of common sense back to the world, and that could be read in that way as well. So there is a bit of suffering. But going forward, like seeing that maybe there will be, the producers will be back to the market. They'll have their shares back on it again. So on the long run, that could be something that is positive. Even now, if we're seeing like a fall in prices, at the same time, this fall in prices, don't forget, could help poorer countries, because now the trade war that Trump has put and the formula that Omar Najia has just shared, like how he did it, it's making it like very unfair to poor countries that don't have much anyway to sell to the US, and now they're getting all these high tariffs. So then at least like reducing the price of oil for whatever reason, for different reasons, will have that really that a bit of relief.
Well, certainly there's no doubt that there are upsides
to their economies.
There's upsides to a weaker dollar. There's upsides to a lower oil price. No doubt about that. The whys of it, however, Clyde Russell, Asia commodities and energy columnist at Thomson Reuters, we're looking to sort of try and kick over here. And are we seeing here a bit of Saudi Trumpism, if you like, in the sense that all those that have been cheating on us now, and the trade deficit language of Trump now, the OPEC Plus saying the same to the non-compliers in the OPEC Plus cuts. Or Clyde, as you might be able to give insights on, China got a memo, or Saudi got a memo from China saying, guess what? We're back at 10%. Get ready. We're going to be growing like crazy again. Send us lots of oil. What's going on here, Clyde?
Well, I think I would be very, very loath to sort of think that the Saudis were behaving in any kind of Trump-like manner. I mean, the kindest thing you can say about Trump is he's delusional and incoherent. And I think the Saudis are probably pretty much the exact opposite of that. So I think they're doing something very considered. Yes, they are firing their cannons across the bows of the other OPEC Plus producers. That much is fairly clear. But it's not really because the Chinese are buying more oil. They might buy more oil if the price falls down into the 60s and even lower. That much is true. But if you actually look at it, first quarter of China and Asia imports were lower than they were for the first quarter of 24. So the hope for OPEC and IEA demand recovery led by China and India and Asia in general, that was not apparent in the first quarter. So my own calculations, Asia's first quarter imports down about 640,000 barrels a day from the same period in 24. So not a picture of strength there at all. That was probably a reflection of the higher prices that went on a sort of rising trend from sort of October through to January. This year, as you know, it takes a lag for physical cargoes to be delivered. So those were bought at higher prices, which probably helped explain a little bit of that. But if you're sort of expecting Asia to ride to the rescue with higher demand, I think this is one of those occasions where even lower prices is unlikely to stoke much higher demand in Asia. Everyone is now going to be in, whoa, the world economy as we know it has just effectively been blown up. You have every now and again, I'm old enough to have lived through the last time the world economy went through, or geopolitics went through a major shift, 1989, when communism collapsed. We in the Western world thought that was fantastic. Our system had won. Now, 2025, the Western world, led by America, is collapsing, and it feels entirely different. So
I mean, just to come back to the, I mean, the scale of the events last week and how they will play out in terms of its historic momentousness is certainly one to dig into. But I wanted just to dig a little bit into the first point you made, that this is an OPEC Plus decision to punish those non-compliers within the OPEC Plus. I struggle with that thesis because ultimately, the list on the number of countries on that list is quite short. Iraq, maybe, Kazakhstan, maybe. There's 20 other countries and generally not in that list. I mean, it does seem a big stick to hit yourself over the head with, $10+ a barrel, because Kazakhstan is overproducing by 200 or 300. I mean, I don't get that. I don't buy that. Where do we see that? Other than Reuters citing 3 unknown named sources who are familiar with the thinking of, I wouldn't bet the house on that one. Give us a bit more depth into that thinking.
Well, I don't think OPEC Plus quite anticipated just how badly the Trump tariffs would be received. So,
could have waited a day or two, but
that $10 a drop barrel we've seen since Wednesday last week, how much of that is Trump and how much of that is OPEC adding more barrels back into the market? I would say $9 of it is Trump and $1 is OPEC Plus adding more barrels back in. That would be my own view. I think people are looking at the Trump actions and thinking this really does blow up the world economy, or certainly lots of trade, and you're now going to have all sorts of concerns about growth. You're going to get investment strikes, those kind of things. So OPEC, in some ways, actually been caught in a storm not of its own making. That said, if you are going to have a global recession, you want to make sure that you push out the high-cost producers like U.S. shale and a few others as fast as you possibly can. And so you make the hit, if you want to put it that way. It might be deep, but it lasts hopefully for a short time. That's what we've seen in past sort of incidents, or times when this sort of thing has happened, like COVID times, 2016, before that. You've actually seen OPEC put a lot of supply into the market, basically a free-for-all, let the price end where it ends, and punish the high-cost producers first. So I think there might be a bit of element of that. But I'm guessing that OPEC is the guys at OPEC Plus are sitting around going, whoa, this is not what we expected either. And they're going to be, thinking long and deep about what they do next.
The red phones will be ringing. Omar, what is this event? Has it caught the market, the derivative, the paper market off? Has it? Have we been on a big short, a big long? Who's been carrying a lot of pain in this sudden, shocking turn of events in the last week? And is that likely to shift in any way?
No, I don't think it shifts basically. So support below the market, which we talked about before, was $65 on 65.20, 65 something on WTI, and it broke that. But that support went back at least 4 years. The fact that it broke it, and the fact that it broke it with or because of the Trump tariffs, just made it basically explode to the downside once that happened. That's the first point. So I think, lower, I don't think anything saves the markets, and I think it's way too early. Market's already pricing in a 100% probability of a June cut from the Fed and a 1% cut by the end of the year. So I don't think you're going to look at this market making like a V-shaped recovery, Trump coming out and saying, only kidding, and everything goes back up. So no, I really don't think so. And the other thing to understand is with tariffs, and it's not about so much, I mean, if you think about it, compliance is to do with the fact that the US is running a deficit because the US exports dollars and exports debt for goods and services, right? Mainly goods. So there is no balancing that. You can make more goods in the States, but then people have got to start working in factories in the States. So I really don't see that happening. The second point is, what happens to that lack of dollar exports? Lack of dollar exports, reduces debt, but also reduces the power of the US dollar and all this kind of stuff. So what I'm trying to say is the reason you're seeing all this stuff isn't because Trump is crazy or any of that stuff. It's because there is nothing else. They're basically, it's time for the kitchen sink to go in. The kitchen sink, that's not working. Chuck in some milk, that's not working. We'll sprinkle some pepper, that's not working. So I think basically you've got to understand, or at least my view is to understand it from that kind of perspective. So you're seeing everybody saying, the US is going to change and manufacturing is going to come back. I think basically that's all kind of, maybe it happens, maybe it doesn't. And it's going to be a short period of transition and we're going to end up in a new place again. I think that's a little bit of wishful thinking. I think basically this is to do with the fact that they've tried everything else and it's not working. And I would bet that they're going to go back to what they've always done, which is print a terrific amount of money. And the next print that we see is going to be absolutely ginormous, not like 3 trillion, but maybe 6 or 9. So I think basically,
well, they do have a debt rollover of 8 trillion in the next 12 to 18 months. Laurie, where is the geopolitics in this? I mean, if you look at the OPEC Plus decision, this is massive to me. I mean, this is predated the Trump announcement. I don't, in all my respect to Clyde, one of my heroes, I don't subscribe to his 1 in 9 views on the dollar fall here, 1 to OPEC, 9 to Trump tariffs. But is there another geopolitical story here? Is there something else going on here that these countries decided that this was the time to shock and awe the markets, to each other, to other countries? I mean, Saudi Arabia is trying to reform itself into a global, new liberal progressive economy that needs hundreds of billions of dollars to achieve. There's big things at stake here. Where do you see the geopolitics of all this amongst those involved? Or are there not any? Your thoughts?
No, definitely what President Trump is doing is America first. Yes, okay, maybe it's their right to think about what would make America great again and how to make it. But at the same time, you see that others are thinking as well, like, okay, how to save our countries, our people, and then how this with like how are we rethinking about politics and rethinking about global economy and rethinking about alliances. And this is where you see that there might be some intersection between the sufferings of the Europeans with the sufferings of these, as you said, regional powers like Saudi Arabia, UAE, and in Asia, where you see India and others, and definitely China. And there might be some reshaping of this global economy, rerouting of the economies, the alliance, the trade routes, all of that. And then every country, I guess, as I said, every country is looking at what are their strengths and how to use them now to save themselves and to be able to have less of an impact of what's happening. So definitely you would see more rapprochement between the EU and the Gulf. You will see rapprochement, but more and more you will see like looking at what are the economic, political intersections between all these different actors. If there is, if the Trump trade war is seen as it's like the US versus all the world, and this is what we are seeing. So definitely everyone is trying to keep calm and carry on, as the British said. And then it will reshape the politics. Like I agree with Clyde when he said like this is something like when we had like the 1990s with the fall of the USSR, and now we're seeing something new is going to emerge. It hasn't emerged yet, so we're in that chaotic space. What definitely, because you remember, Sean, after COVID, people started thinking about the supply chain and how to do the nearshoring, all of that, because that was a big issue. And then today, I think that trade war is going to have an impact on the future, how we do trade, who does what with who, and the alliances. Knowing that definitely the US is still the US, it's not like insignificant, but I guess there are, like when you say we do have regional powers, they do have a power. And we've seen in the region, Saudi Arabia and UAE, how they are using the power with the US, in the US, with Europe, in Asia, all of that. So they will
the middle powers are
not
certainly
going to go back, definitely.
No.
They're not going to go back into the bottle. They will seize this trade war and they will seize this chaos politically and geopolitically. It's an opportunity to really have more of a role in the new reshaping of the world economy. And
well, on that point, Clyde, should we be thinking of this moment, and as you and Laurie have put in these historical terms, is this also a moment, are we at the beginning, the foothills of the what always seemed inevitable to me, that we would eventually arrive at the low-cost producer wins and low-cost producer no longer looks to control the supply to maximize price, but maximize production and let the chips fall where they may? Have we turned now down that road, do you think?
I think that would be a big call to make right now. I think I'd want to hear what OPEC has to say, OPEC Plus has to say once they've sort of digested just
which
what
essentially
they think
puts them out of a job as well, right? Because ultimately,
in some ways it does, but there's still a whole range of things that we haven't really, don't know much about what's going to happen. Is Trump going to go hard on Iran? Is he actually going to follow through on his threat to put more tariffs on people who buy Russian crude? I think, the Chinese are going to laugh at those and just sort of say, well, we're going to carry on buying Russian crude, doesn't matter what you do. So I think we are at that kind of, I think it is an inflection point, and I know that's a horrid cliche, but that's really what it is. Things are changing, and they're changing fairly rapidly. In that situation, where you are likely to see a major hit to demand across the globe for crude oil, it's sometimes actually the most sensible thing to do is, if you are the lowest cost producer, you pump as much as you can and you force the others out. I mean, that's the logical thing to do. Whether they actually will do that or not, who knows? And is it a tactic that's worked for them?
I mean, you mentioned earlier the 1980s reference, the Berlin Wall, the end of the Soviet Union and so forth. What preceded that was a big Saudi increase in supply that ended up the market ended up moving very firmly away from them or the OPEC at the time. And Saudi is the swing producer. That historical moment being somewhat disconnected. How significant this one will be? Are these two parallel corridors, the Trump decision, the scale of it, and the OPEC Plus decision and the scale of it? Could they have both made ginormously shocking decisions in completely separate corridors and not knowing in either case that the other was going to be the scale that it was? And so the double together has resulted in this, or is there some sort of intersection point here that I mean, clearly Trump wants lower gasoline prices at the pump for American drivers. He's certainly going to get it. Is that by coincidence or by design? Let's go to the survey question, which is looking at, is there a reverse gear here? Do you expect OPEC Plus to reverse plans to accelerate oil supply increases after the price collapse? The decision first was made to go in April, 1 month, a somewhat insignificant amount of increase that was essentially nearly cancelled out this month, April, because of what was expected to be corrections by the non-complying countries. So April was seen more or less as a net zero. But then OPEC Plus announced, no, in May we're going to accelerate that increase, and with all of those, the price is this now the shock and awe moment, as Clyde indicated there, $1 being the OPEC decision, 9 with tariff. Will OPEC Plus wake up this Monday morning and go, holy cow, back from our Eid holidays and there's no money in the bank, let's reverse gear here? What do you think OPEC does? Yes or no? Is this a moment of sober realization, or is it double down, more of the same? So expect reversal or not. Omar, on that question, where do you think we go from here? Are there any reverse gears in Trump's tariff box? Are there any reverse gears in OPEC Plus's increased supply plans?
I mean, the short answer is no. And again, my kind of thinking, my kind of point is, I think that it's a little bit delusional to think that Trump can basically do quote unquote tariffs in whatever form, at whatever level, and expect basically to make America great again. It doesn't work that way. So if you want to
sounds good though, it does sound good.
Yeah, but if you want manufacturing to go back to the States, you've got to invest for 5 years, maybe 10, 15, all this kind of stuff. So all this talk, everything's going to change, all this kind of stuff. My view is that the total opposite. Nothing's going to change. What you're seeing now, I think, is all this arm waving. We're doing it. We're going to make America great and all this kind of stuff. And everybody like, oh, we're going to do this, we're going to do that. But what's coming next is the same thing that we've seen from 2008 until today, which is money printing. People are not stupid. They will not buy American debt, not at these levels. You can't push the 10-year down from 4.2 to 3.9 by collapsing everything and say to people, look, our debt is now, lower because we screwed the market. So buy it at a lower level, finance us, let us get cheap financing. It doesn't work that way. So this idea that everything has to happen now in a second, and Trump saying it's going to be short term and don't worry, whatever, it's delusional. They're going to do whatever it is they're going to do. They're going to cut and they're going to do QE, and you're going to see a tsunami of money coming. The US dollar is going to go down. Prices in terms of inflation are going to skyrocket. It's the same thing, inflation is transitory, don't worry and whatever. And the same thing now, buy the dip. So I think basically all that kind of stuff is absolutely delusional. I think nothing changes. And the next thing I expect is a massive amount of QE that comes and take inflation way, way higher.
Laurie, your thoughts on the same question. Is the reverse here? I mean, the Middle East, the Gulf states, even in all of their wealth, this is significant revenue loss. to abandon the sort of managed market approach. I mean, the idea of balancing supply and demand. Clearly, in this moment, they seem to have abandoned that strategy. That will bring significant reduction in revenues to the Gulf oil producers, and then consequently the trickle down of that remittances from the Gulf to Lebanon, your country. 400,000 Lebanese work in the Gulf, et cetera, et cetera. The dominoes fall heavy from here.
Definitely, these are all to be taken into consideration. I do think that for the producing countries now, again, when this strikes and the money is, the revenues are less, so then you become more picky on what project to use, like the big projects, infrastructure projects, like these projects that they're doing on to move on into like more diversified economy. So then they would become more picky. There will be projects that might be stopped, slowed down, etc., because there are priorities, as you said, when the revenues are lower. So that will happen. I think there will be more of efficient project management. There will be more of public communication. I think that has been something that we've been seeing, like the leaderships talking to their people more often, explaining what is happening. And at this stage, this is more important for everyone in the region, because as you said, like it could be that less money coming from an Egyptian that is working in Saudi Arabia, and then that would have an impact already in Egypt, and then people might demonstrate on the streets of Egypt, and this is the last thing that the president would want. So it does, and on top of that, as you know, like everyone is really anxious again because of the war that is continuing in Gaza, and all these sad stories, like horrific stories that we're hearing, and today Netanyahu being in the US. So again, like we don't know, are they going to decide on a strike to Iran? So that will be another major event. So definitely being more efficient on the projects that the countries continue in their road into the diversification of their economies, talking to the public, making it clear that the public is united behind their leadership is very important to keep calm in the region and then to move on.
Clyde, just the last word with you on that. You mentioned that even though at these discounted prices, WTI at 60 and Brent in 63 or so, normally China would be buying this off the shelf. Saudi Aramco announced its OSPs yesterday for May, heavy discounts to Asian buyers. Why wouldn't they be biting the hand off of these prices?
Probably because the Chinese think it's probably going to go lower still. So I think they'll sit on the sidelines for a little while and see just how low it does go. Why buy at 63 when you can buy at 55 in 2 weeks' time? That might not be the case. If they see the market finding a bottom, they might say, yeah, we're going to step in now.
Where are we, just sorry to interrupt, Clyde, just to interrupt you briefly there. Where are we in the annual cycle of Chinese demand and consumption coming out of obviously the New Year period, the Chinese New Year and so forth? Are we going into a peak or lower demand period where consumption?
Well, this is a time when the refiners generally import more because they want to build up fuel reserves or fuel inventories for the summer peak. You know, you get a lot of agricultural demand for diesel, you get more construction demand for diesel, transport, that kind of stuff. So yes, you would expect normally to see a fairly strong second quarter. It's not most maintenance is finished, so that's kind of how you would expect that they would be wanting to buy. But you also know that they've actually been topping up inventories for some time, although they did draw on them in the first 2 months of this year, according to my calculations. So there might be some scope for them to buy if they believe that prices are near a bottom. For the rest of Asia, it's a different calculation. The Indian refiners don't like to hold huge commercial inventories. And if they think fuel demand is going to crater, especially the export type refiners like Reliance, they won't buy, even if the prices are cheap. So they'll more be looking at what are they seeing in the product demand sphere, and they'll be trying to work out from that. But I think, you know, if you're talking about the sort of hit to the global economy that we now think is likely, that's not, you know, prices would have to fall a long way before you'd start to say, people say, well, yeah, we're going to buy lots.
Well, it's certainly from a historical reference, reminds me of the days when I first started covering this space, which is in the mid-90s. And when OPEC plus OPEC at the time decided to increase supply going into what turned out to be the Asian financial crisis, and oil prices, Brent, went down to below $10 a barrel as OPEC raised supply into a collapsing demand window. Are we seeing that movie again? And that is, as Clyde signals there, maybe the Chinese think this can go lower. If you take all the pieces of the puzzle currently thrown up in the air, you wouldn't bet against that. Adding significant amounts of new supply, accelerating new supply into a weakening demand window generally has one consequence. Just correction, earlier I had said the 1980s for the increases in supply. I meant the 90s. Actually, in the 80s, it was the opposite, Saudi cutting dramatically to try and prop up the price and ending up losing huge amounts of market share. So big dramatic historical references there. At the moment, it's OPEC plus increasing supply, accelerating the increase of supply into what appears to be a collapsing global economy. We'll have to wait and see, but let's it's Monday morning, it's only 10:30 or now 11 o'clock, and we're well over time. Clyde Russell, gotta get back to work. So no is the answer here in this room. Do you expect OPEC to reverse? No. 2-1 no. Laurie Hitain, thank you so much. And Omar Najia, thank you as always. Great to be back. We better not go away for a week again. Dramatic things happen, and we have to stumble our way back to sense and make sense of it all. Have a great week, everyone. All the best. Thank you.
Thank you.